Hi, my learners. Hope you are doing well. This is Mr. Mboli. Today we are going to do our second activity under ledger account, and this is accounting grade 12. All right. Let's go through the activity. What are we required to do here? We are required to prepare the ordinary share capital, the SARS income tax, the shareholders for dividends income tax, dividends on ordinary share capital, the appropriation account. I think they left something here. Number G, they left the returned income. We must also prepare the returned income. All right. Can we go through now our information? Our information goes as follows. On 1 July 2010, which is the beginning of our financial year. At the beginning of the year, the company had the following opening balances. We are having our ordinary share balance as how much? As 1 million rand. So here it's gonna be 2010 July 01. Remember, this one is an equity account. It increases on the credit side, it decreases on what? On the debit side. Remember, in accounting, you always start with your balances. Then here we have our balance brought down, and our balance brought down is 1 million. All right, and then we are also given the number of shares that were issued at the beginning of the year. Here we also have our returned income balance at the beginning of the year. This is where I'm going to write now my returned income. Returned income. I'm gonna put balance here. Balance what? Balance brought down. How much is the balance for the return income at the beginning of the year? We are given 180,000. Okay. All right, now let's continue with our balances. SARS income tax. When it's come to this one, you must check here. I think here they made a mistake. They were supposed to say CCR, not CT. Okay. Now the balance now under SARS income tax we are given, and that the balance is what now? It's a credit balance. Let's go to our SARS income tax. What do we know about SARS income tax is that this is our liability. It increases on what? On credit side, decreases on what? On debit side. So here at the beginning of the year 2010 July 01, we are having our balance brought down. How much is our balance brought down? Our balance is brought down is 9,000. Okay. Then we also have shareholders for dividends. In other words, now once we have a balance here, it means that we are owing dividends for last year. Remember, shareholders for dividends is what? Is a final dividends, which is declared but not paid. We are now creating a liability for ourselves as a company. So now let's go to our shareholders for dividends now. We have our shareholders for dividends here, 2010, July 01. We have a balance brought down. We are owing our shareholders. How much are we owing at the beginning of the year? We are owing 130,000. Okay. Always start by recording your balances. Okay. Let's go to information number 2 now. On 1 July 2010, issued 50,000 shares to the public at 7.50 per share. So now we are issuing further shares to the public. Obvious, when we are issuing shares, the company is going to receive money. So, and that money will go to the bank. So here our ordinary share capital is affected. Still 2010, still July. I will just write the July here. The date is the same. Now, because we are selling shares, and the money will go to the bank. That's why here we must write bank, CRJ. Okay, and then we must write our calculation now in bracket. It's gonna be 50,000 multiplied by 750. 50 multiplied by 750. Then my answer is gonna be 375,000. Then I'm done with number 2. All right. Number 3, 23 July 2010, paid the amount owing to SARS and the shareholders. Remember now, when we go to SARS, we had a credit balance, and a credit balance means that we are still owing SARS. In other words, we underpaid SARS in the previous year. So now this year we are paying the money that we were owing last year. Then now bank is affected. We pay this money 2010 July 2023. And then when we pay, bank is affected. CPJ, how much were we owing? We were owing 9,000. We also paid our shareholders. We were owing them how much at the beginning of the year? We were owing them 130,000. But on 2010 July 2023, we decided to pay them. How much? We pay them the money that we were owing, which is 130,000. All right. Let's continue now. Okay. And then number 4 now. Number 4, 31 December 2010, a first provisional tax payment of 112,500 was made to SARS halfway through the financial year. So now we are paying our income tax. We are paying SARS now. We are paying SARS our first provisional what? Payment. So it's gonna be bank here, CPJ. How much did we pay now? Did we pay? We paid how much? 112,500. We paid it on 2010 December 31 is the date. Now let's continue with our information now. 31 March 2011. We bought back 20,000 shares. The directors decided to buy back these shares at R8.50 per share. We bought these 20,000 shares at R8.50 per what? Per share. Alright, now we do have what we call our ordinary share capital. But now in this case, I always prefer to do the note, not the ledger account for ordinary share capital. I'm going to do the note here for ordinary share capital. Ordinary share capital. We all know we are given this information that at the beginning, how many shares were issued? 500,000 shares issued. We were given also the price at R2 per share. We were also given the amount. The amount is 1 million. Let me show you that information. All right, here we are given the number of shares, which is 500,000. We are also given the amount, the total amount for this 500,000. So when you say 1,000 divided by 500,000, you are going to get R2 per what? Per share. That way I got that information, and then I'm done with this one. And then remember that how many shares were issued now during the year. It's 50,000 shares were issued during the year. Then I'm gonna write here 50,000 shares issued during the year. At how much? We are also given the price, and the price here is R7.50 now. I'm gonna write my R7.50 now, and the total amount it's gonna be 375. It's written on our calculator. It's gonna be 375,000. Now we can go back to that information of a buying back now. When we read now, they are saying 20,000 shares were repurchased, and then these directors decided to buy back these shares at R8.50 per what? Per share. Why now I was preparing the ordinary share capital? Because it's very important, especially when it's come to the buying back of shares. Now every time now when we record the buying back, you must put it in what? In bracket. Shares repurchased at how much? Here guys, you must write the average price at an average price of how much now. Now the question is now, how do I calculate now the average price? This is the formula for calculating the average price. Is equals to the total amount of shares issued divide by total number of shares issued. When I'm referring to the total amount, I'm referring to this side. When I'm referring to the number of shares, I'm referring to this side on my left. All right, total amount of shares issued, it's gonna be 1 million plus 375,000 all over total number of shares issued. 500 plus 550, it's gonna be 550,000 shares, and then this one is gonna be 1,375,000 all over 550,000. Then now I'm going to get my average price. Let's go and calculate our average price now. It's gonna be 1,375 divided by 550. Then I'm getting now my average price is 250. Then you go to this ordinary share and then you put your average price at 250. Then here it's always in bracket, buying back it's always in bracket. It's gonna be 20 multiplied by 250. Then here it's gonna be 50,000. Then I'm done with the buying back. Then I'm gonna take this one as it is to the ordinary share capital ledger now. Okay, because money is going out, then it means our ordinary share capital will decrease now. Bank CPJ. When was the buying back of shares? The buying back of shares was on 2011 March 31. CPJ, you can just write your calculation in bracket. It's gonna be 20,000 multiplied by, remember here we are always using the average price, 250. And then how much did we get? We got 50,000. We got 50,000 rand. All right, now the question now is, because now the average price is 250, but the shares were bought at 850. In other words, now we bought these shares above the average price. That means now a certain amount of money for the repurchase of these shares was taken from the retained income. Then now you must go and check how much was taken now from the retained income. You go now, the amount of money that was taken from the retained income is the difference between the buying back price and the average what price now, which is 250. It's gonna be 8,5 minus 2,5, then it equals to 6 rand. 6 rand was taken from the retained income to buy these what shares. Now let's go to our retained income, because 6 rand was taken from our retained income, then it means that now our retained income now will decrease. Bank CPJ. Now when was the buying back? The buying back was 2011 March 31. Then CPJ, CPJ, then here you can just open your bracket. I said to you 6 rand per share was taken from the retained income. Then it's gonna be 6 rand multiplied by the number of shares that were repurchased by the company. Then it's gonna be 6 multiplied by 20,000. It's gonna be 120,000 rand. It means that 120,000 rand was taken from the retained income in order for the company to be able to repurchase these what shares. All right, now we can also now go to the appropriation account. Now we all know that now when we talk about the appropriation account, here it's always the end of the year, which is June 30. We have net profit before tax. Here we are having our return income at the beginning of the year. The return income, this one is at the beginning of the year. Then now I'm gonna open a bracket. Now we had a balance of 180,000 as our return income, but because now we bought back a certain number of shares, the total amount and then a total amount of 120 was taken from our returned income. Then now it means that now in our return income, now we are having how much? 180 minus 120, we are having 60,000, as we took 120 and then we repurchased what? The shares. Okay, I hope learners understand this one. Then if you don't understand this one, please ask where you don't understand. I will explain it further. All right. Let's continue now with our information now. But before I continue with our information, okay, it's fine. I think I'm sorted. Okay, let's continue with our information now. Now let's go to information number 5. I'm sorry guys, I made a mistake here. I jumped information number 5. Let's go back to information number 5. And then on 31 December 2020, an interim dividends of 15 cents per share was paid to shareholders. Remember guys, when we are talking about an interim dividends is declared and paid. Therefore, bank is what? Is affected. Let's go to our dividends now on ordinary share account. All right, this is our credit side, this is our debit side. And here we paid on 2010 December 31. Bank is affected here. We paid, CPJ is affected. We paid how much here? We're going to open a bracket here. The information says an interim dividends of 15. Now let's go and check the date now. By the time we were paying the interim dividends, we had how many shares in the company? Let's go and check now. This one, when we go to our ordinary share capital, this one was on 1 July 2010. Even this one was on 1 July 2010. But now the interim dividends was on 31 December, and this one was on 2011 March 31. So that means now guys, by the time we were paying the interim dividends, we had how many shares in the company? We had this 500,000 plus this 50,000. So by the time we were paying the interim dividends, we had 550,000 shares. Let's go now and calculate now the interim dividends using the 550,000 shares. It's gonna be 550 here, multiplied by the interim dividends of how much? Of 15 cents all over 100. Then how much is our interim dividends? 550 multiplied by 0.15. It's gonna be 82,500. It's gonna be 82,500. 82,500. Okay, I'm not putting the zeros intentionally, guys. But when I'm writing my answer, then I'm putting the zeros, but on my calculator I'm not putting the zeros. Let's go to our information now. Information number 7 now. Yeah, information number 7 now. 30 June 2011, a second provisional tax payment of 120,000 was made to SARS at the end of the financial year. So now we are paying our second provisional tax payment. Then this one is gonna be bank CPJ. How much did we pay? I think it's 120. It's 120,000. It's 2011 June. I'm not sure. June 30. We paid our second provisional tax payment. All right. Let's continue with our information. Number 8. 30 June. We paid the final dividends of 30 cents per share, or a final dividends of 30 cents per share were declared at the AGM but have not yet been paid to the shareholders. We all know when we talk about final dividends, is dividends that is declared but not what? But not paid. It becomes what now? It becomes a liability for the company now. Let's go and record it now. Check the date now. This one took place on 30 June, guys. Now, by the time we were paying now the final dividends, how many shares we were having in the company? This one took place on 2011 March, but the final dividends took place on 30 June 2011. So that means now, in order to get the number of shares we had by the time we were paying the final dividends, it's gonna be these shares at the end of the year. It's gonna be 550. It's gonna be 500 plus 50 minus 20. Then it's gonna be 530,000 shares. This one are issued at the end of what? Of the year. Then we can just get our balance at the end for our ordinary share capital. 1,325,000. Okay, we are done. So that means now final dividend, it's going to be, we're going to calculate final dividends on 530,000 shares, because by the time we're declaring the final dividends, we had 530,000 shares in the company. Okay, I hope you understand this one, because this one is very important. Even this note for ordinary share capital, it's very important. Make sure you master it. Let's go now and calculate our shareholders for dividends, our final dividends. I'm not going to write bank. Why? It's because this one was declared but not paid. Then here, instead of writing bank, I'm going to write shareholders for dividends. Then I'm going to open my little bracket for calculations. It's gonna be 530 now, multiplied by how much was paid, 30 cents, multiplied by 30 all over 100. It's gonna be 530 multiplied by 0.30. It's gonna be 159,000, and then I can just close it off. Where do I close it off? I close it off to the appropriation account. It's gonna be 244,500. I'm going to close it off at the end of the year, the June 31 appropriation account. 244,500, 244,500. Then because here it's a written appropriation account, let's go to the appropriation account. Remember, if on the appropriation account, if on the dividends ordinary share account it's on credit side, it means on the appropriation account it must be on what? On debit side. Let's go and put it on the debit side of the appropriation account. This one is gonna be 2021 June at the end of the year, which is 30. Where did I take this one? I took it from the dividends on ordinary share. How much is 244,500? Okay, now let's continue now with our information. Let's continue with our information. Information number. Okay, before I continue, remember this one is a liability for a company, and it must also be shown in what now? In the shareholders for dividends. This one is a liability for the company, so that means now here on 2011, yes, on 2011 June 30, I'm owing now. This one is a credit, this one is a debit. I'm owing now. I'm owing dividends on ordinary share. How much is the dividends? Is the amount that I calculated here, which is 159. I'm creating a liability for the company. All right, let's continue now with our information now. 30 June 2011, and then after the completion of the audit, the income tax figure for the year was determined as 240,000. This was calculated on the net profit figure of 800,000. So we are given everything. We are given the income tax, we are also given the net profit before tax, but they were supposed to specify here. Let me just say before. All right, let's go now and record this information. Here we are having our income tax, because all along when we are paying our first provisional payment, our second provisional payment, we are trying to reduce this amount of income tax. And how much is the amount? Is 240,000. Then we are done. We can just close it off now. We close it off now. Let's check which one is bigger between the credit and the debit now. When I'm checking here, it's gonna be 9,000 plus 112,500 plus 120,000. I'm sorry, here I made a mistake. It's 120. Then is 241. Let me check my credit side. Is 249. So that means now my credit side is bigger than my debit side. Then I'm going to balance both sides with my credit side. Then it's gonna be 249 minus 120 minus 12,5 minus 9. then it's gonna be 7,500, and it's gonna be balance now. Balance carried down. Balance carried down. Then it means when I'm reopening my financial year on 2011 July 01, I'm having a balance brought down of how much? Of 7,500. I'm having a credit balance now. It means now I'm still owing SARS now. Okay, and then remember guys, this money must be shown in our financial statement under what? Under trade and other payables, because we are still owing SARS. All right, thank you. Let's continue with our information. We are given also our net profit before tax. Let's go and record it under the appropriation account. Our net profit before tax is 800,000 we are given, and then it's 800,000 we are given. Here we are also given our income tax. I'm gonna just write the date. You all know that the date is the same. Our income tax we are given as how much? As 240,000. As 240,000. Then now I can just close off my appropriation. Remember, the main purpose of doing the appropriation account is to calculate what now? The returned income. All right. Let's get the balances now. The bigger side is obvious, the credit side, 860,000, 860,000, 860,000, then 860,000 minus 244,5 minus 240. I'm getting my return income as 375,500 now. Okay, this is my returned income, guys. Okay, all right, then here I'm going to write 2011 June. Remember, if it's on a debit side under the appropriation account, then here it must be on what now? It must be on the credit side. It's gonna be the the appropriation account, general. How much is the amount? Is 375,500 now. All right, then now we can just complete our return income. But everything is simple now. We can just complete our returned income now. We can just complete our return income, or you can complete this one on your own. All right, let me complete it for you. This one we all know this is debit, this one is a credit side. Okay, here we are going to have SARS income tax. Remember, this one, if here it's on credit side, on the other side it must be on what now? It must be on the debit side. This is how you can cram it now. 240,000. Then where do we close it off? We close it off to the appropriation account. 240,000. Then we are done with our return, with our income tax now. Yeah, I think I'm done with everything, guys, but there is something that is very important that I need to do now. I need to do the returned income note. This one is very important. The format goes as follow: balance at the beginning of the year. Then here I'm having my net, I'm having my net profit after tax, net profit after tax. Here I'm having my buying back, here I'm having dividends, I'm having interim, I'm having final. All right, and then I'm having balance at the end of the year. I just want to prove this return income, guys, using the note for the returned income. Remember, we were given our net profit before tax as 800,000 and our income tax as how much? As 240,000. And remember that the difference between the two, it will give you a net profit after tax. It's gonna be 800 minus 240,000. Sorry for that. 800,000 minus 240,000. Then our net profit after tax is 560,000. Now, balance at the beginning of the year under return income, we were given as 180,000. Then I'm gonna write here my 180,000. Then the buying back, remember how we calculated the buying back of shares. We said 20,000 shares were repurchased, but here how much was taken from the return income? It was 6 rand. Then here it's gonna be 6 rand multiplied by 20, it's gonna be 120. And remember, buying back, it's always in bracket. Then dividends is differentiated into two. That is what we call interim and the final dividends. Remember to put your calculation in what? In bracket. But because I have calculated our interim and the final, I'm going to take them as it is. Here it's gonna be how much? Our final is 82,500. No, our interim is 82,500 and our final is 159,500. And when you combine the two, you are going to get how much? You're going to get 244,500. 244,500. Now let's prove it now, guys. In this calculation, our return income under the appropriation account must be the same as this one. Now, what do I mean? I mean this amount must be the same with this amount that we are going to get here. Now let's prove it. Now it's gonna be 180,000, sorry for that, plus 560,000 minus 120,000 minus 244,500. Hello, our return income is 375,500. Using the note for the return income, and it also the same with the amount that is appearing on the appropriation account. That means we are correct. But please, guys, make sure you master this return income and this ordinary share capital. Those two notes, they are very important. And make sure you keep on practicing the buying back of shares. Thank you. We are done with our lesson.